22 million people, as of this morning, are now unemployed, and it's probably worse than that here in the United States. So in today's video, we're going to talk about how that negative news is creating amazing trading opportunities for us as active participants in the Forex market. Now, we don't want to prey on people in a struggling position. We don't want to look at this as we're taking advantage of the people that are struggling, the people that are waiting on that $1,200 check, right? But at the same time, as active market participants, we need to be aware when there is opportunity and when our market is there so we can put our foot on the gas and take advantage, because that's what this business calls for. So today, like I said, we're going to talk about the unemployment claims first, and then I'm going to explain to you how these record-breaking numbers, really never before seen in even my parents' lifetime, in a lot of people's lifetime, this could be, first in the United States in history, how these numbers are creating opportunities for us. Hey traders, today is Thursday, April 16th. So about an hour and a half ago at 8:30 New York time, we had our weekly unemployment claims number come out. Today, it actually came out a little bit better than forecast at 5.245 million people filing for unemployment in just the last week. That was, like I said, a little lower than the forecast of the 5.35 million they thought it was going to be. But still, this pushes us now in the last 4 weeks over 22 million people now unemployed here in the United States. So what does that mean for us as Forex traders, right? How do we, unfortunately, it's a weird way to say it, but how do we take advantage of this opportunity? And that's how I want you to see it. But I don't want you to think of it as we're preying on people in a disadvantaged position. I don't want us to look at it that way. We are running a business here, and our business tells us that when our system is presenting and market volatility is there's movement in the market, we want to get into those trades. We want to put our money, our business to work in those trades, because that's what the business plan calls for. This external stuff, the unemployment claims, the coronavirus, the trade wars, the halting of production across the world, all of these things, that plays into what I would call the global macro picture. The volatility in that global macro picture can create amazing opportunities for us because of really one thing, and that's what I want to talk to you about today. But first, before we get into that, here on Forex Factory, this is where I come for my free news every morning. This is like the best website for me because it's free and it's accurate and it's quick. Like, they update it very quickly. You can see if we open this up, just a month ago, unemployment claims were relatively normal, around 200, 300,000, which they had been that way for a while before. So there was nothing weird there. But very quickly, this has been literally a month where we've now gone from regular unemployment to now record-breaking unemployment to the Great Depression levels of unemployment. And I'm going to make another video, put that out tomorrow or the next day, talking about more of that global macro picture. I want to stay focused on the unemployment claims for today's video. Just so you know, this unemployment claims news comes out every single week on Thursday in the United States at the same time. So you've got to keep your eye on this, because I think other people are watching this. This morning in the market, we saw a lot of consolidation, but once this news broke, things started to move. So it's almost like, because it's a high impact news event, the market's going to wait in anticipation of that to see the exact numbers and then react. So we want to do the same thing as traders, react, not forecast. You could have been like, yeah, it's going to be 6 million and tried to short the euro or whatever it may be, and that's just not the way to trade. That's gambling. You're just guessing. I want to flip you over really quick, just show you, this is Fox News. They said, they actually had a couple of really interesting statistics in this article. One was that before the pandemic, the largest number of Americans to seek jobless aid in a 4-week stretch was 2.7 million, and that was back in 1982. We're literally 10x at that number at this point. So we've literally gone from 2.7 million being our record in a 4-week stretch to 22 million, almost 10x. It's insane when you really think about it. The other thing that we should point out is that they're quoting 13% of the labor force here being laid off. I've seen other statistics saying 18, 19%. We're not going to see that exact number until May 8th. I went to the government's website just to see exactly when the release is at 8:30. That's when we're going to see April's unemployment rate, the percentage, and that's going to be huge as well. But again, to get us back to the unemployment claims, not so much the unemployment rate, this Thursday event is super important to watch for. And what I've seen over the last couple of weeks, as the situation has unfortunately gotten worse for a lot of people, we've seen average daily range across all currency pairs increase. I want to show you exactly what I mean. I'm going to link this article down below. This is from Offbeat Forex. Don't know this guy. I found this on the internet and I checked it. Seems like a good resource, so I want to share it with you guys. He has a table here that shows the average daily range of most of the currency pairs, the ones that I trade. This is literally everything I have on my list. He shows you the average daily range from 2014 all the way through to 2019. So what I want to do is just prove my point to you here about why right now, all of this unemployment stuff, all of this global macro stuff that's going on, the craziness, is resulting in more movement behind our system, more movement in the Forex market on a daily basis. And that makes our trades go further. That means we might have a little bit bigger of a stop loss typically than we typically would, but it's also going to, like I just said, run further. So take a look. Let's flip over to the chart. First, we're going to start with Euro USD. So I use an average daily range indicator. You can find this on TradingView if you just search in the indicators up here. There's a bunch of average daily range indicators that you can use. I'm looking at 5-day, and that's what this chart is based off of as well. So if you look here, the average daily range right now on Euro USD today was 87, which means on an average day, right now, you could expect Euro USD to move about 87 pips. If you look at the chart, here's Euro USD. The highest before this 87, it was only twice has it been higher, 2015 and 2016. 2015 across the board was a very, very volatile year. And I think we're going to see 2015 is going to look a lot like 2020 when they add that column to the chart at the end of this year. But if you look at 2019, just last year, ADR was only 55 pips. So right there, basically Euro USD is moving 40 more pips per day on average than it was last year. That's a lot. And that helps our trades go further. Let's look at another pair. Pick a random one. Let's take a look at CHF-JPY. We'll erase some of these drawings. We don't need that. You could see yesterday ADR was 68, today about 70, 71. So let's look at CHF-JPY. Last year, ADR was 58.5. At most, this was 146. Back again, like I said, 2015. So you're seeing, even over the last 2 years, 2018 into 2019, we're looking like we're moving up to actually seeing an increase in volume here, especially comparative to 2019. Take a look at another one, AUD-USD. Here, ADR is 107 right now. If you look back at this chart, last year it was 48, so double. You get the point. All pairs are moving more right now than they were 5 months ago, 12 months ago, even 24 months ago for some of these pairs. And that's really why I've been saying it on every social media outlet that I can, that now is the time to get involved in this market. Because if you can, and you have a system that you can follow, you're going to be able to catch trades that run for multiple days and run way further than they were just a few months ago. This same signal. Let me give you an example. If you take a look at GBP CAD, this was the trade that I was in on Tuesday. The trade itself, I was long at about 7:30, had about a 14 or 15 pip stop loss at most. From my entry position, it ended up going about 120 pips. Average daily range that day only told me it was going to go 54. It blew right through average daily range and literally went twice as far as it was supposed to. So you're seeing insane volatility behind our entry signals. That's an A1 entry. You can go back and watch the recap video. I don't need to go into that for this video, but you can go see how we call that same signal almost every day, right? And now, because of this volatility, the moves are like a rocket ship sometimes. Not all of them. And I'm not going to say you're going to make $1 million. I'm not promising you anything like that. I'm just saying the moves are bigger. Again, a 13 pip stop is not very big. That's typical for me. So sometimes the stops are bigger, but not always. And you're still able to catch that big rip. So take advantage. Pay attention to the news. You use Forex Factory to keep yourself up to date. The stream will keep you updated on breaking news, and the scheduled news is normally very, very accurate. So I would use that and use the idea that these things are moving now more than ever to kind of slow yourself down in your trades. Be patient in your winners. And I know that's easy to say. I struggle with that too. We all do. But if we can leave some of these trades alone and let them do what they're supposed to do, the volatility in the market now is going to take over and make that trade beautiful for you. You have to remember, currency exchange rates don't go to zero. Stocks do, but currency exchange rates don't. If a currency gets completely wiped out, then I guess it just wouldn't be on the chart anymore. We wouldn't even be able to trade it. So you're not going to see these things disappear. You're going to see more volume and more volatility come into this as money is being moved around the world. The exchange rate has to be there no matter what. This market is recession proof. So take advantage as everything hits the fan and people are worried about their stocks and they're worried about their mutual funds and their 401ks. You can take full control and start investing your money behind these systems, not behind a gamble, behind a system, and build your business with us or with any team that's actually making money. But that's what I always advocate to everybody right now. Because of this unemployment stuff, you should be taking back control. If you're waiting for the government to give you a check, you're waiting for the government to put their hand out and feed you, it ain't coming. You need to take it back. And if you got a little bit of money to spend, now's the time to put it to work. So if you have any questions, any comments, any concerns, if you want to talk to me more about unemployment, just drop a comment down below. If you enjoyed the video, please just give me a thumbs up and subscribe so you don't miss any of the future videos. I appreciate you guys very, very much. and I'll catch you in the next one.